wow, with crypto, it's no longer just a passionate audience, but it's a passionate participant, or it's a passionate owner or co-owner. And all of a sudden, this level of value creation is completely unlocked because people have a real stake in this community and a real stake in this business, and they add to it and they make it better. And this level of engagement is completely different, not seen in Web 2 companies.
Hello friends, Jess here from C Club. Welcome to Season 3 of Building at the Edges. We host conversations with the top innovators, thinkers, and builders at the intersection of crypto and community. All right, folks, I am late in providing this intro to our podcast editor, Samsonite. Apologies, Samsonite. Recording this from my hotel room in New York. I had a pleasure of speaking at the CoinDesk Ideas Conference today. It's late, but we're here. We're going to lay down this introduction to a conversation that I really enjoyed. The time flew by in speaking with Gaby Goldberg. Gaby is an investor at TCG Crypto, and we start off this conversation diving into TCG Crypto's investing thesis, specifically the power of passion. I think it's a really useful frame to look at the world of Web3 and communities through. We got into a conversation around tokens and how TCG looks at them through the lens of their investing. And Gaby actually played the Uno reverse card, asking me a bunch of questions that led to a good conversation about how we're seeing them at C Club. And I think there's some interesting insights that came from that. We also talked about a concept called DAMs, or decentralized autonomous media networks, something Gaby had written about back in the day, which I guess was only a few months ago, but I think is uniquely relevant today, just given how many DAOs are exploring media and the number of social media meets Web3 type startups that are emerging right now. So I found this conversation fascinating. Gaby's a phenomenal explorer in the intersection of Web3 and community. So let's jump into it. Hello, Gaby.
Hey, how's it going?
Good. I'm trying to figure out what my stock intro should be here. And so I think I'm just going to go directly with the hello Gaby
that
one.
Yeah, I like it.
So stoked to have you on the pod. I feel like there's no introduction that I could give you that's going to capture the fullness of all the things that you've been up to since we've last chatted and in the space. So why don't you start us off with a brief intro?
Yeah, sure. Well, first of all, I'm super excited to be on this and chatting. I feel like I run into you at various fun crypto events, but you're 2 feet taller than me, so we can't really get down to having a great
same level here.
And intimate chat. And so, yeah, now that we're at the same level right now, I'm excited to have this conversation, and I'm super excited to jam on all the stuff that you guys have been up to also. I guess brief introduction about me is I'm an investor at TCG Crypto, which is a consumer crypto investment firm underneath kind of the umbrella of the Chernin Group, which is a consumer investment firm. We can get into it in a little bit. Before that, I spent time at Bessemer Venture Partners and Chapter 1 before that doing consumer investing. And I studied computer science and philosophy in college. And so kind of fell into the space thinking about a lot of topics that I was exploring in college around digital identity and social computing and human-computer interaction and things like that. And I guess I'm one of the lucky ones where what I studied in college actually is very relevant to what I get to do every single day. And yeah, thinking a lot about those topics now in the context of consumer Web3.
The philosophy angle makes a ton of sense now, because I think one of the things, as I was saying to you earlier, that I love about preparing for this conversation with you is just how prolific a writer you are. And from sort of my outside view, it really looks like that was sort of a big accelerant in your career, or at least I sort of saw you as somebody who really came up through, earlier days within this Web3 space, but made a name for yourself in really thoughtful, clear, thought-provoking writing. So I'm curious, on your path to TCG, which is, we're a very proud portfolio company of TCG Crypto, and has a long and massively successful history in the Chernin Group more generally in consumer, and that's really the thing that made us so excited to have you as partners. But I'm curious, this path that you've taken into your current place in your career, maybe the impact of writing and sharing your thoughts, because I think that has probably a through line for our conversation here.
Yeah, sure. The story sounds so much better now that you're at the end of the story, and it sounds like I really had it all planned out. But honestly, I had no idea I would end up in crypto. I guess a lot of people can resonate with that. And I also had no idea I would end up in venture capital. VC is the thing that I fell into and fell in love with before crypto, actually. So I guess starting from the beginning, my first real job was as a computer science instructor at a startup called Junie Learning. After that, I went and I worked abroad in Israel at a branch of a consulting firm that was really focused on bringing their multinational clients to Israel and connecting with innovative companies on the ground there. And so in a way, it felt a little bit like venture capital in the sense that I was meeting founders in Tel Aviv. I was building market maps of like what spaces I thought were interesting and what companies in those spaces were really hot. And I was figuring out kind of like where the broader firm should spend time. When I was in Israel, I did a bunch of writing, and I also was using the platform Lunch Club, if you remember what that is. I don't totally know if it's around anymore, but at the time, it was in like a private beta, and my older brother's roommate had given me a code. So I felt like I was like super cool getting access to all these cool people on the Lunch Club beta. And basically you would just meet up and get lunch with people in your area who like more often than not were in tech. And so I was writing a bunch about like the topics that I was researching in my job. I was spending a lot of time on AI infrastructure, which let's not get into because I don't remember any of it. But I was writing about all of that online, and I was meeting folks who were like oftentimes Americans living abroad in Tel Aviv. And one of them happened to be a venture capitalist, and he had read some of the writing that I had put out. And he said, you know, like you would actually get paid to do a lot of the stuff that you're doing in your free time if you worked in venture. And I was like, okay, like say less, like tell me more. And his advice to me was actually to get on Twitter. And so he basically said, obviously Twitter's not everything, but you make an account and it's a really good way, you know, if you follow the right people to really quickly figure out what the smartest people in a space are reading and writing and thinking and who they're spending time with and all of that. And so I did that. Mind you, this was all in like February or March 2020. I forgot to bring that up. So I guess maybe you know where the story is going. Probably 2 weeks after I made a Twitter account and I had posted some of my writing on there is when COVID hit. I lost my job. I got sent out of the country and I went back home to live with my parents. And it was actually on my flight home that I saw basically this post on Twitter that changed my life. So Jeff Morris, who's the founder and GP of a seed crypto fund called Chapter One, tweeted out that he was hiring an intern for the first time to be like his first hire at this $10 million venture fund. So I sent him an email, basically said, I don't know anything about venture, but I would love to learn more. And like, here's what I've been up to. And I really do feel like I was just so lucky to be in the right place at the right time. And I got the opportunity to work with him really quickly, fell in love with venture capital. I was there for the better half of a year. I went over to Bessemer after that to join their early stage consumer team. And very quickly into that journey, I started to fall down the crypto rabbit hole due to the pushing and prodding of a couple friends, Brian Flynn, Near at Yup, Brenner Spear. I had stumbled into the Bright Moments Gallery in LA when they had just started minting crypto Venetians. And that was one of the first few NFTs that I minted and one of the first communities that I really felt like I was a part of. And I began to be really compelled by Web3, particularly from this consumer lens and really how community-owned networks could solve a lot of the problems that I had seen through the creator tools and the consumer marketplaces that I had been studying and looking at while at Bessemer and while at Chapter One. And so I kind of knew like, I'm not an expert in this. I don't think I'll be a real expert for a long time, but if I want to be, I have to do this full time. I don't think it's possible to invest in Web3 as a part-time job. And so I wanted to go to a place where I could do that from a consumer lens. And so that is how I ended up at TCG a little bit over a year ago. And it's been the coolest journey ever.
So I think what's so interesting when you come through like such a hype cycle like we've just come through, that a lot of like the little things get missed. And when I've been thinking a lot about this with regards to Seed Club and specifically how we support our builders and early stage teams and how important so many little things are that ultimately lead up to big opportunities. And I think that's sort of from my outside view, what I've seen from you is, and even just the story you just told, it's this sort of working in public, if you will, putting things out into the world and not exactly knowing what that might lead to, but it's sort of like these ideas of shipping ideas that ultimately lead to it. And we see that in early community building as well. Like there can be this big pull to feel like you need to do all the things, be in all the places. And yet when we look at Seed Club projects that have really excelled, what they've done is they shrunk that down into very discrete experiences and discrete publications, et cetera. And I think I was scrolling your Twitter feed earlier, and I love the fact that you moved home from Israel to your parents' house. And this one tweet here stood out as like the most wholesome, defining tweet that I could find on your, with a brief scroll, arguably. Nothing more healing than brewing a K-cup in your parents' house with 2% milk.
Totally.
And there's llamas in your feed at some point, and I think there's a whole lot of things here. Maybe alpacas. I don't know. So okay, I do want to maybe frame up this conversation because I think that will lead us into talking about what TCG is working on. And then I want to dive into some of the thoughts that you've been sort of noodling on for a while. And that's this idea of value creation in Web3. And I think framing that again through coming through a massive speculative moment within the space, one that I think has left many people thinking, where's the there? What is the sustainable there? And just sharing that more as like a framing for this conversation, because I think both in your experience and the seat that you sit in and the communities that you're active in, I think that's probably where we can provide the most value for folks listening to this as we sort of take stock of where we've come. And then really, I think the question most people are asking is what should we be doing moving forward to position ourselves for new opportunities in the space? Because I think pretty clearly that we're both very convicted in this being a thing. But I think this consumer lens is super interesting. It's a big trend we're seeing in the space that definitely didn't exist there 2 years ago, but is, I think most firms have a consumer angle now or somebody on their team who's looking at consumer. So I wonder maybe if you could, let's kick off there, maybe get into how TCG sees consumer crypto, your personal views on it. Let's look at it through the lens of where this is all going.
Yeah, definitely. And I was really excited to jam on all of this with you because, like I said before we started recording, so much of our thesis thinks about this idea of what value creation looks like now. And so, yeah, basically the story of TCG was founded a little bit over a decade ago. And one of the co-founders, Peter Chernin, is basically famous in Hollywood for greenlighting and helping to produce all of these TV shows and movies and really famous pieces of film that actually at the time a lot of people didn't want to do because they were so expensive, one of them being Titanic. But just some other examples of the stuff that he was involved in: Ford versus Ferrari, 30 for 30, The Last Dance. He did The Simpsons and New Girl and stuff like that. And he has this podcast with Patrick O'Shaughnessy at Invest Like the Best, where he kind of talks about this story that I definitely recommend everyone listen to. I listened to it before joining, and I also listened to it more recently, like a few weeks ago, and it was so cool to hear just, the new things that I pick up listening to it for the second time. But he kind of describes the common thread across all of this media that he was producing as quote unquote offensive media. So not everybody would like it, but if you liked it, you would spend a lot of time and a lot of money, and it would actually prove to be a really good business. So a good example, when he was working on The Simpsons for Showtime, the idea was not everybody would like it, but if you did like it, you would go, oh, have you seen this new show, The Simpsons? Yeah, it's on Showtime. You've got to go watch it. And obviously it worked. That was kind of his thesis, this idea of offensive media and leaning into these really niche, passionate audiences when starting TCG, the investment firm. And so you can kind of see it through their investments in media businesses like Barstool Sports and MeatEater and Food 52 and Epic Gardening, where with all of these businesses, not everybody likes it, right? Not everybody likes gardening or not everybody is into Barstool. But if you like it, you're going to spend a lot of time and you're going to spend a lot of money, and these passionate audiences turn into really powerful revenue generating businesses. So kind of the crypto part of that started in 2018 with a seed investment in OpenSea. After that, they invested in Dapper Labs with NBA Top Shot. And then after that, in 2021, during kind of this rise of the GameStop and Reddit style investing, led the Series A of Zedrun. And at that point, the thesis started to change for TCG of, wow, with crypto, it's no longer just a passionate audience, but it's a passionate participant, or it's a passionate owner or co-owner. And all of a sudden, this level of, value creation is completely unlocked because people have a real stake in this community and a real stake in this business, and they add to it and they make it better. And this level of engagement is completely different, not seen in Web2 companies. So I think that largely was a big excitement and driver for TCG to spend a lot more time in crypto. I guess now that's, fast forward 1 year. I'm really lucky to be working with Jared Dicker and John Moore and Dilvir Vahali and a new team member soon who we haven't announced yet, really spending time exclusively focusing on early stage Web3 investing, but from this consumer lens that TCG has always had. And really, in a nutshell, it's investing in passionate communities. So the framework for us is we look for passion first. We look for places where people are spending a lot of time, oftentimes places where people are spending money, communities that seem to be really strong and interesting, and then figure out how those things are uniquely enabled or uniquely supercharged by crypto. And so some of the investments we've made along that thesis are things like Rabbit Hole, Altered State Machine, Hume, Immortal Game, We've made 2 investments in digital fashion companies, Drop and Tribute Brand, which I think are really good examples of like these new areas of passion for people who love digital art. So yeah, that's kind of how we spend time. And so for me, like anything across the gamut of consumer, whether it's gaming or fashion or art or something like building a museum like Archive, all of these things are super interesting to me when I can find places where people are super passionate.
Yeah, I think there's like a ton of insight there. And obviously this is very aligned with our thesis at C Club. So no shock that I have some deep affinity for that angle. And I haven't been using the word passion. I think that's a perfect term. But I've been thinking a lot about, from an investor point of view, how people are participating in this ecosystem. And it seems to be, very schemorphic in that many are approaching it like they're investing in SaaS products or enterprise SaaS products. So I'm going to find a great tool that's going to enable a bunch of things, especially in the DAO space. And we're seeing, whether it's too early or there's a mismatch there, we're seeing challenges in product adoption there. And really actually where we're seeing some of the most exciting value being created and even tools being created are those that are coming out of these communities themselves. So the difference here being that, communities traditionally in Web 2 or broadly before that might have had a passionate user base, but they lacked the capital to be able to actually bring some of those dreams to life, to build the tools, et cetera. And now what we're seeing is these communities who have this deep understanding of the problems that they're facing also have access to talent, resources, capital to be able to invest in these sort of things. And so I think like this lens of, we back startups that are tools that are going to serve DAOs versus we back DAOs or communities, I think is maybe a hot take still, but I'm pretty convicted, and I'm sure people listening to this pod have heard me say this many times, that in the latter being the bigger, more exciting upside. And I think to me, the word I use a lot is intimacy, right? Like there's this broad, crazy internet out there. Actually, you have a lovely post on why the internet is so lonely, and that I would love to talk about. But I think that there's sort of like this, when intimacy or passion sort of starts to coalesce interest and alongside capital, all of a sudden a whole lot of new interesting things can start to emerge there. And it can be very difficult to do that when you're saying, hey, we're going to go build this tool, if that tool isn't part of some broader big adventure or cultural movement or meme. So I'm curious, you said looking at passionate communities and then exploring why they're uniquely enabled by crypto. Can you unpack that a little bit more? Like, what are you seeing as the unique enablers that crypto provides?
Yeah. So I guess it's important to note on this that we're not necessarily looking for new markets, although sometimes we invest in new and emerging markets. So for example, we're really excited about on-chain gaming, but we're not necessarily investing in net new markets. We're investing in new experiences, whether it's in a new market like in on-chain gaming, or it's a market where now because of crypto, you can do something that you never could have done before. So for example, now you can be a co-owner of a sports team, or now you can help to own a decentralized record label, which is really relevant to our investment in Hume. Or you can help to curate a museum like Archive. I'll dive into that example. So Archive, it's spelled Arkive. I've had to clarify that for a few people, so I figured I would just spell it out. But Archive is trying to build the world's first physical decentralized museum, basically being like a museum for the internet. And I guess the thesis for it is that traditional museums like the Met or the Smithsonian are actually really, really powerful and huge businesses. You can go find their tax statements online because they're nonprofits. They make a ton of money, but they do a really poor job of actually capturing the economic value that they create. So a good example is very few people in the world will ever actually get to go to the Met or the Smithsonian. And even if you do get a chance to go, 95% of the assets that they own are locked away into private institutions. And so you're only ever going to be able to see 5% of a collection at a given time. So the bottom line is like very few people in the world will ever get to see the most valuable and culturally relevant objects in history, let alone have a chance at owning them or deciding what those things are. And so the question that Archive is kind of asking is like, what would it look like if a museum were curated by its members, curated and owned by its members? And so they do that, obviously no surprise here, through a DAO where NFTs act as kind of like governance passes into the DAO to, allow you to be like curatorial within the community. And they curate these like physical one-of-one objects and showcase them throughout different physical locations. And so they acquired the MTV Moonman prototype, they acquired the patent for the first digital computer, the ENIAC, and continuing to kind of acquire assets across technology, art, and fashion and things like that. But allowing the community to actually be owners of them as well. And it's a perfect example of like, obviously it's not a new market. This has existed for a long, long time, but it's a new experience that people never could have had before. And it's possible because of crypto.
Yeah, I mean, I think Archive is a fascinating example. And we had Thomas on the last season, so people can go back and scroll up the feed and go deeper. Yeah, I love seeing that framed as passion, but also I think in seeing some of Jared's tweets more recently, there's this idea of being able to participate in things that you would normally have to build a 20-year career to have an opportunity to participate in. And I think that's an interesting lens here as well, where, I think the DAO narrative is so often, or one of them is this idea of the future of work. And I think we might over-index on the idea of work and less see the opportunity of like maybe the status or experience of what some of that work might enable. So, this idea, I think one of the interesting things we're playing with at C Club is like, accelerators, Y Combinator, ventures, this very closed off thing. What if we can expose that to more people? What if you can be involved in not only, the consuming of the products that are being built by these sort of technology founders, but instead be a part of the deciding and supporting and early discussions around all of them. And I think when you start looking through that lens, the opportunities out in the space just become fairly large.
Yeah. And it's so true what you said about future of work, not necessarily being incorrect, but just not really encapsulating the whole of the thing. Like maybe it's future of passion or something like that, but oftentimes these people aren't doing this for work, right? Like you go into the Archive Discord and it's nights and weekends. Like all of these people have jobs, but they're hugely passionate about what they're doing and they want to spend time. And now they get to make it something that becomes a part of their life, whether they're making money from it or not. But it's super cool to see like kind of those experiences being unlocked for the first time.
So maybe just further onto this value creation or uniquely enabled by crypto, the tokens are sort of such a fundamental building block in DAOs and in community-owned networks and these new internet native organizations. And yet at the same time, I constantly have this tension of both, having a point of view on where I think tokens can be used most usefully and how they might be used effectively. And then also am very aware of the complete massive unknown that we're still playing in. I'm curious how you look at tokens through the lens of your investing.
Yes. And if it's okay, I'm going to like flip the interview back on you because I have a lot of questions through how you're seeing it at Seed Club.
I love it.
To be fair, a lot of the companies that we invest in are pretty early in their life cycle. We invest at seed. And so many of these companies haven't launched a token yet. And if anything, I think a lot of them are looking for this sense of like token market fit even, or like product market fit of figuring out who their users are outside of any type of financial incentive or speculation and figuring out who's really spending time and who's engaging and being a real member of this community before a token is introduced. It's almost like IPOing too soon. That being said, a lot of these companies do have NFTs that allow for some level of involvement in a kind of like decision-making process. So for example, Hume is a decentralized record label primarily focusing on incubating these meta stars, like digital native influencers, starting with Angel Baby. I think I actually might be Angel Baby's biggest fan, and I like want to gatekeep it. So I keep getting recognized by Angel Baby, but no, it's okay. I'll talk about it. But basically the Hume Genesis Pass allows for people to have a say in like where Angel Baby spends time, what music they're dropping, on what platform, where they're going to go tour, what they're going to talk about on certain Twitter spaces and things like that. And so in a sense, it kind of does some of the work that a token would do. The last thing I'll say, and then I have my question for you, is Alana Levin, who's a friend of mine at Variant, just wrote this piece that I think is amazing, basically on like when to launch a token. And it kind of talks about like, like finding this idea of product market fit before any sense of a token. I think it's really helpful. So would encourage people to read that. But yeah, I'm curious for you, I guess like the specific question is, do you differentiate between like 721s and ERC20s when you talk about launching a token for the Seed Club cohort, or how do you think about it?
Yeah, it's a great question. And there'll be some people laughing at that question because I have a blog post that's been sitting in drafts for far too long on this.
No way.
Because I feel like it's like a much bigger question than you might think early on. But the short answer is no. And I think it's fun. NFTs, ERC20s, they're all tokens, right? What do we see tokens as being used for? Representing membership, governance, ownership in these digital native organizations and community-owned networks. And so, I think that the unique angle we have at Seed Club is that we see these builders we're working with as building these new digitally native organizations. And a core aspect of that is that ownership, revenue generation, governance, decision-making is anchored on chain versus anchored in more of a traditional legal system. And so tokens become sort of a core piece of that. And I think we're big fans of being thoughtful about how you embed that ownership structure in early. Not necessarily a big fan of needing to launch tokens before you're ready. I think you can see that just through the number of communities that have come through C Club that are still pre-token and are really continuing to build out the value and connection they have with their communities before launching one, because it is, as you say, it is like going public in a certain way. Like there's a very different world that exists for running those communities once there's a token price, et cetera. But there's also some other very real challenges with launching tokens that lead us to believe that by far the best token type for early stage communities is an NFT 721 specifically. I think people underestimate the amount of management that goes into launching an ERC20, both in providing liquidity and emotional management of sort of price swings, so you don't sort of get fully away from that within NFTs. A lot lower lift there. And then also there's, I think maybe a more important piece is they do a better job at capturing the cultural significance of, and perhaps to use your word, the passion that exists in a community. There's something different about there being an image or a collectible or some way of representing that either as a PFP or in your gallery. And I think in talking to Jacob Horn, he uses this example of thinking about nouns versus Uniswap. Both, he would argue, are sort of meme-based organizations, and that the value is being driven by this belief in the value of the organization rather than any specific underlying economics that are being flowing through the organization. And that if you put a 100-foot statue of a unicorn in Times Square or a 100-foot statue of the Noggles in Times Square, would the ERC20 of the Uniswap token see an increase in value? Or maybe not, but would you expect to see more demand in the value of the tokens for nouns? I think it's intuitively a more likely and more direct tie to the meme having an NFT versus an ERC20. So I think for all those reasons, it just makes a ton of sense to use NFTs. And I think we've seen that trend in our cohorts as well, where 1, 2, and 3, and even into early 4 ERC20s were where people were thinking. And I would say probably 80 or 90% through 4 and 5, we'll be looking at NFTs as the right token. But again, we see NFTs as somewhat of a collectible, but more like a ticket to an adventure rather than the product that you're purchasing. So less here's a membership pass that's going to access things and utility, and more, here's this membership pass that represents my involvement, my identity, my belief, my governance in these new types of organizations.
That last part is so huge. Jared talks about this all the time, but this idea of most communities in Web3 today, it feels better, or people are more incentivized to get out versus stay in. And I think it's because there's too much of a focus on that first thing that you talked about of okay, I've got the access, and now, when the price goes up, I'm out. It's not tied to me. And making it a part of your identity and something that you really contribute to is a huge aspect of it.
Yeah, I think we battle against the very real short-term incentives that live in crypto. When I think about, all my years in the space, 2 big mistakes get made constantly. One is you miss out on something, which is unavoidable, right? We can't get in on anything. But 2 is that you kind of sell too soon. And, of course, you see a massive appreciation in something. It's a very logical thing to do. But I think, having been really early into the Web 2, as that was emerging, but very early in my career, and seeing just how completely unaware, or how I could not grok just the size and scale of the digital transformation that was coming, and now looking at what's happening within Web 3, and I think where we are today is this sort of, maybe we're in a trough of disillusionment of some sort. Pretty clearly we are in many of the sub-segments of crypto, but I'd sort of step back and think about just the potential and scale of all this sort of stuff, that I think it is that being on that adventure to build something that you want to have exist in the world, and then to be able to signal that. That's why I just love seeing people put C Club in their Twitter bios. To me, that's sort of an incredible metric to see how many people are truly identifying with their participation and role and excitement about this community. And I think that may be a harder thing to fully define, but more of a lasting value contributor to these communities over time.
Definitely. It also kind of made me think there's another interesting kind of dichotomy that I see a lot of times with companies that we work with or companies that I meet, where sometimes a source of pride, or almost in a sense recurring revenue, is what your secondary sales are. So you mint it out, but you've got secondary sales, it's super liquid, people are trading all the time. And I guess for certain, if you're a brand, or that's what you're optimizing for, is totally fine and cool. And seeing a blue chip project that has that much liquidity is really cool to see. But in the sense of a community, or if you're calling it a community, secondary sales means that your community is churning, right? Who are your actual people and who's spending time? And so instead, we're trying to figure out like, what do business models look like that don't, Web3 native business models that don't necessarily rely solely on secondary volume as like the primary means of cash flow to the business. I think a really interesting one is this new concept of free to own. And so we're investors in a gaming studio called Branch, which launched a game called Castaways a couple weeks ago. The first kind of NFT or asset that is used in game was like a free mint, and it minted out. And now people are like wanting to spend time and want to spend money, but it's not necessarily like paying up front and like minting out, and kind of this idea of how you see a lot of projects acting now. And so it's kind of like this interesting dichotomy of like, you don't want to not make money, right? Like secondary sales are oftentimes crucial for a business or a project. But if that's all you have, then it's like, who's your community?
100%. I think it's actually increasingly unsustainable given the automated market maker trend within the NFT space as well. And so I think like very clearly the 10K PFP moment was impactful, but also like is not a good model for specifically for communities. And I think if you're holding a Bored Ape token, like, and it's not a comment on Bored Ape, generally you can use it to refer to any sort of PFP of that era. I'd really see you as a consumer of that rather than an owner or a member of a community. And I think all the things that you're talking about here, along with the fact that you just don't really have a say over what's actually happening with the treasury and the value that's being created there, sort of lead me to suggest that. And that's not a bad thing. As I said on Twitter, like I'm very proud consumer of Art Blocks tokens and the Chromie Squiggle, but it's a very different thing than say Squiggle DAO, where I have the ability to have a say and be a part of it. And I think one is a collectible and the other is a community, and they very much should optimize for different things. And I think the big thing that was not, maybe it wasn't required to be focused on in this last wave, was really like, what does revenue look like? What does capital generation look like? I think it's easy to see secondary sales as that, but I think it is not sustainable for most communities, especially early stage ones. And so the right token design today, I think, is one that is actually takes a very hard look at like, where does value come into this ecosystem? And it's a thing that when we launched C Club, this is before NFTs had their moment, or I guess their second moment. And this idea of sort of token swaps for governance stake in these communities was just a novel way of getting on-chain ownership, revenue, capital formation in a certain way. And then just to see how much that's expanded with, NFTs are just so much more of a powerful model for that, I think. But the way they were applied, early in the cycle versus I think some of the trends that are happening now, which is like nouns, this very clear way of putting capital into a treasury and going and doing cool things with it. ENS posting, $5 million worth of revenue through their business model essentially into a DAO. And I think a lot of like the teases people are exploring around membership, I think are really interesting. Like those models, I think, will be iterated on and applied in very different ways. They have their strengths, they have their weaknesses, but it's the innovation that's going to come from that with a real clear focus on how do we actually make this sustainable, whether that is immediately today or at least having a game plan to it that's going to be really interesting to follow.
Yep. I agree. Couldn't have said it better.
I like this flipping it on the hat. I mean, I always think of these podcasts as like, I don't like being an interviewer. I like being deep in conversation. And I feel like these are the types of conversations you and I would just have if we were sitting down at a crypto conference, maybe not standing up. So we're at the same level, but
right, exactly.
But I like it, through this sort of look at where value is created in Web3. I think this idea of, passion as a high signal, this big adventure that we like to call it, and then sort of chunking that into like the experiments that are being run right now that are quick iterations on something. These projects many of these ones are less than a year old, right? And we're already seeing the weaknesses of them, and you're already seeing new experiments that are happening in the space. And so I think that's super useful for folks that are, my guess is there's a lot of folks thinking about building their next thing. They're already building a thing and thinking about how to shape that thing to be more relevant, more compelling, more valuable moving forward. And I think there's a lot of people who are thinking about like, where should I be spending my time, whether that is in which communities or what the future of my career. I think we're sort of in this big shift. So my hope is like a lot of these conversations will cut through a lot of the noise and speculation and hype or I guess negativity that exists maybe on Twitter right now, and instead give some waypoints of where people can focus. I wanted to pull some of the threads that I've seen, at least have stood out in my mind through some of the thoughts that you've been exploring over the last year and a bit. And it seems like right now, DAOs and crypto more generally is, I would say, having like a media moment. There's this idea of like, what is the role of Web3 media? What is the role of media as it relates to DAOs and communities? How should we as operators of these communities think about media as part of a product mix or strategy or even tactics for growing the value in our community? And you had a really early experiment in this space that, I think featured though unofficially, one of my favorite hip hop artists. First albums, second albums, called DAMs, these decentralized autonomous media networks. I'm wondering if you could maybe sort of pull on a thread there. Like, what were you getting at there? And then I think more interestingly for me, how has your thinking evolved?
Yeah. I learned a lot from this experiment, and I have to give really all of the credit to Kieran. He's at NeuroSwish on Twitter, and he's continuing to build kind of in and around this space with a product called Verse, which I think is truly one of the coolest and most crypto native consumer and media products I've seen, I don't know, ever. So definitely all of the props to him. And I was really lucky to kind of work with him and learn with him on this. So the idea of DAM when we launched it is, maybe I'll start with kind of like a thought experiment of what would Instagram look like if it were collectively owned by its users. If you think about Instagram today, it's functionally at odds with its users, right? Like its founders and shareholders have made massive amounts of money and its users haven't, even though its users are exactly the people who have contributed the very content that made Instagram what it is. So I guess if you can think about it, like with a community-owned network, maybe a token distributed across all of Instagram users or an NFT, Instagram would essentially be collectivized against its roughly 1 billion users. And it would require this new kind of governance model to make sure that token holders feel a real sense of alignment and upside with the future of Instagram. Because users of Instagram are really only incentivized to benefit themselves, you start to see really interesting things happen to the network as a whole and the types of media that gets proliferated. So you start to see people spamming the feed or using hashtags or doing those weird promos like for like and follow for follow, or sometimes posting hate speech because they know that it's going to go viral, becoming really, really polarized. Versus, let's say you had a network that was collectively owned by its users, all of a sudden, people are actually incentivized to benefit the network and not just themselves. And so what Kieran and I thought would happen is people would curate the feed, and maybe it would branch off into kind of like smaller, more niche networks, like what's the best pizza in Brooklyn, or what's the coolest hat that Jess wears. But these like really niche, interesting networks, and people would be curating them in the hopes the value of that token would actually go up because of the value that they are creating and adding to the platform itself. And so I kind of started to think about it in the context of like the media that I really like and follow, but obviously doesn't follow this model. One of them, this is super niche, but it's this menswear Substack blog called Sprezza, which I love. Just like, I think the content is really cool, and like I love the guy's takes on everything and like different collabs. And so if there's like a cool collab with like Kith that drops, like he's gonna be the first one to talk about it. And I don't think it's so big. Like it's not necessarily like a viral or super popular newsletter, but if I had a token, like a Sprezza token that aligned me with the upside of it, I would be very incentivized to help curate the feed and introduce him to people who could add new content to the newsletter. Probably not me, obviously, but someone interesting who could add to it. And I would be incentivized to share and distribute and tell more people about it. And it would actually help the business as a whole. So that was the idea with DAM. We crowdfunded to basically create one of these networks. I think we kind of fell short in a couple ways. One, we were creating a DAM about dams. We wanted to create a media network for people to talk about decentralized media networks. And I think probably it would have worked better if we had picked a really niche topic where, surprise, surprise, people had a lot of passion, whether it was something like pizza or something else, and like kind of help to figure out who those stakeholders were from the get-go. And I think also we kind of like fell victim to this issue of like IPOing too soon. And so when we launched the project, it was my first time crowdfunding for anything. It was super cool that we could do it on Mirror. I think we were like one of the first like groups of people to like do a crowdfund like that on Mirror. But all of my DMs for the next couple of weeks were about the price of the token, which was totally not the goal. And it ended up distracting us too, right? Like not just distracting the people who we wanted to be a part of it, but like us as founding members of the project. So that was kind of how we thought about it. And I guess it's how I'm thinking about it now, where I still think decentralized media is super interesting. And obviously it's an area where we want to spend a lot of time from an investment perspective as well as just a personal perspective. I think the last thing about it that I'm still working through, and I'm curious if you have thoughts, I'm pulling the Uno reverse card again, is how decentralized can it be before it kind of loses its sense of like identity? So I'm trying to think of an example there, but we sort of see it with a lot of the companies that we work with that build really interesting media, but there's still some sort of like leader or like quote unquote creative director who's driving the sense of identity and purpose for the thing. And so, you know how people talk about like minimum viable crypto, maybe there's like a minimum viable decentralization or like something like that, where there's a certain kind of like optimization function where it works the best. And I don't totally have an answer for that yet.
So yeah, I have been deep in thought around this, and actually early in the exploration of something that we're working on at C Club, your article on dams came up, and was actually very curious to hear, just because I don't think we've chatted since you launched that around this specific thing. And I think, yeah, this sort of friction point of, and I think it shows up in media DAOs, and I think it also shows up in DAOs more generally around, is consensus the way to get to the best thing, especially if that best thing is creative or if it's a product specifically. And I think that my clear answer is no. You don't want to hear from most people, and maybe you do individually, but maybe there's not a mass market for that. And then just smashing them all together, like all the, the colors of paint together is going to be gray, and gray's not all that interesting. So I think that from an editorial point of view, and also I think you just see so much of media today, and I think, Brian Flynn is an informative person in both of our pathways into crypto, and I very much disagree with his take on where media is going and then the importance of social capital. I think it very much is trending towards individuals and personalities being the coalescing point, I guess the Schelling point, if you will, of attention. So, I think the model needs to be one that both looks at how you can use maybe not decentralization, but ownership, participation to get the value of what you're looking at for token holders to feel incentivized and a part of this thing, while also allowing for or incentivizing individuals or people with a point of view to really take center stage, or organizations with a point of view to take center stage. Yeah, even if you look at the most popular TV shows, any media, like it's the creators that are behind that are the thing that is valuable, and where sort of, reputations and investment goes. And, eventually when we see it, it looks like a brand and it looks like it has its own thing. But it's, I think, important to look at like the pieces that were required to get to that point. And even maybe look at like where Marvel is today, you can sort of see like the obvious fall off that happens if that becomes less about the creator with a differing, strong point of view, and instead becomes more about like the brand and just capitalizing on those opportunities. So I think it's interesting. We're working on something that we're going to share eventually. We can talk about it offline. Sorry, podcast. This is still too early to talk about, but I think fascinated with it. Yeah. Ooh, that's mean of me to say, but it's not because I don't want to share it, but because it's just not quite shaped yet. And to your point of like, I think being thoughtful about how and when. Twitter is a crazy place. And when you put a token out, all of a sudden you just have everybody feels like they have a right to an opinion, which, I mean, if they bought your token, maybe they do. At least there's some greater access or right, I think, that kind of comes with that. But the reality is, my opinion is not useful for most things. Like, I don't know what the hell I'm talking. I'll have an opinion on a lot of things, but I should not. Or I mean, maybe I shouldn't share that opinion, or feel like that I should share that opinion with any impact. And so I think that's the case with a lot of like the creation opportunities. Everybody's got opinion, but when you're early in creating something, not everybody's opinion matters. And what does matter more and more, I think, is people who have direct experience in and around the thing that you're doing, and to have it shaped by that. And so I think that, again, speaks to one of the core challenges in coordination in DAOs right now. And this idea of like everybody votes on everything, which, we don't believe in, but I think is still a narrative, versus how do you empower small teams with insights and a vision to go do those things and coordinate tightly amongst themselves, rather than the more global or meta version of the organization.
Right. And you see that working with organizations like Flamingo, for example, which in a sense is becoming a brand. Like Flamingo, as a curator of assets, is like a really valuable internet native brand. And like I talked to Andy Weissman about this once, and he had this way of describing it that I thought was so smart, where Flamingo as a brand is almost similar to like the Louvre, for example, of like you go to the Louvre to see the Mona Lisa, but you go to see the Mona Lisa because it's in the Louvre. And you almost see that with assets that Flamingo decides to curate, of like Flamingo is valuable because it has curated valuable assets. But now the new assets that they decide to curate will likely increase in value because they're under the umbrella of Flamingo. But obviously, like their curation process, it's such a small group of people who I would argue like have a right to have a seat at the table. I think the question of like exclusivity in these conversations is like definitely important of like, how do you support emerging artists or like emerging collectors who have their eye on interesting spaces. And I wrote a piece on curation called Curators All the Way Down that kind of talks about this, of like searching for trends at ground level and figuring out how you can curate from like a bottoms up perspective as opposed to top down. I think it's a good example of like where it is working.
I think it's a great example, and shout out to Andy. He's a wonderful conversational partner. So I think what's interesting with, the two things. One, I believe, I don't know if this is a plan or not, but if you look at Flamingo, there's the value of the assets they have in their treasury. And if you're looking at a venture fund, like maybe that's one way to look at it. Like often the value of that fund is the value of the NAV. What is this value we created in the investments? I think Flamingo, because of this brand value, you're suggesting it's similar to the Louvre, there is actually more value there. And my guess is they'll launch an NFT membership pass of some sort or some other way of, maybe even they don't go down that path, but you'll see people valuing participation in that group because of all the things that come along with it as more than, or at least as a premium to whatever the underlying NAV is. And I think, I don't know the details specifically, but I think that's already happening. And so I think that's interesting to show that there isn't just like the baseline value of the thing. There's also this sort of, I guess we'd call it goodwill that exists on top of it. And when I was sort of really trying to wrap my head around nouns, and Jacob was doing his best to enlighten me in the brilliant ways that he does, he sort of used Red Bull and Virgin as like the fiat versions of what nouns is building, right? Which are like, or Coca-Cola, like the base thing isn't all that valuable, but this goodwill and brand that's being built around it truly is. And I think that's what we're seeing emerge in crypto generally, is this idea of like, and maybe even extend, right? There's these sort of subcultures, these memes, these category leader brands that are actually valuable because of the position and trust and progress they've made, and that there's a premium that will be paid for those, or for participating in those.
Yeah. Then the question becomes like, how do you figure out, I don't know if you can, for what it's worth, but like, how do you figure out which brands are sustainable and which ones aren't? And it's not just a problem for Web3, but like any kind of brand sometimes can fall victim to these like hype cycles. And we were talking about like BuzzFeed as a good example, for example, now, which like really doesn't have the same level of cultural significance that it did even 5 years ago. And how do you predict something like that happening in Web3? Even like you see examples of like, I felt like the hype around nouns was very similar. I might get yelled at for this, but like very similar to the hype around loot. And a lot of the people who were super excited about loot are super excited about nouns. And I think nouns has a lot of merit, and I think it's really interesting. But I also thought that loot didn't. So it's hard to figure out like which of these like mimetic kind of brands holds that value over time.
Yeah, I think there's a quote. I was speaking with Yancey Strickler from Meta Label a few weeks back, and he was talking about the 21 Immutable Laws of Marketing. Al Ries, it's a seminal marketing book, and one of the laws is something like a trend is a fad whose demand hasn't been served, and a fad is a trend whose demand has been served, which I think is interesting, kind of related here, right? I think it's sort of this idea of like, let's put Bored Apes in that path, right? Everybody, there's just more to capture the complete demand, where if you look at, I don't know what a good counterexample will be, but one where maybe Flamingo is a good counterexample, right? Where there's so much demand to be a part of it, and they haven't really leaned into expanding that. And then I think the other piece here is like when you look at a Virgin or a Coca-Cola, like there's truly a revenue model here, right? And so like this idea of like, I was sharing in our cohort earlier this week of like the evolution of token value narratives, which sort of started off as tokens are currency, and then it became tokens as utility, utility tokens being the narrative of, maybe ICO 2018, 2017, and then governance tokens sort of took over. And now we're in this like, I think, meme token era. And that's not to say that it's just purely meme. It's actually sort of probably encapsulating multiple pieces of those other parts, but that is the harder part to get right, and where the big opportunity is. And a subset of those narratives are, what is the utility, what is the value, where's the revenue coming from in these things. So I think we need to have like, you can't just look at a community or a brand as being hype and think it's going to stay around. And I think your BuzzFeed example is another great example here, right? Like the fundamental issue with BuzzFeed was that the model that they were executing on was really built for an era when Facebook was sending a ton of free traffic to that type of publication. And once that shifted, which is sort of like the underlying revenue model, and there's even broader shifts in online advertising that are impacting them. Okay, all of a sudden the economics of that changed, and therefore the value of that changes as well. So, those are my maybe 3 cents on what I would look for is like, where's that passion about them? Where's sustainability? Where's the, let's just call it sustainability, because I think when I look at a nouns versus loot, you have the same sort of decentralized ethos, this ability for people to participate, but there's two things that got different. One, it's a small group of people that hold nouns tokens, and that initial price was a big factor in that. Same like Flamingo, right? Like both these projects got who should be around the table right early on, kind of by accident, right? It wasn't like I'm going to choose you and you and you, which I think is an appropriate way to go. It was because of either timing and who was around and paying attention, and or ability to pay a large amount of ETH to participate. And so that naturally sort of shrunk the circle quite a bit, which I think allows for more values alignment, or at least easier coordination. And I think the second piece is that there's revenue generation, right? So this token sales going to a treasury is a very different thing. You're in a different position when you have that capital to go and perpetuate the meme versus what you're relying on with loot is, and really could, and maybe it still will, result in, this ecosystem of development. But sort of the question of like, where does the capital for that investment come in? I think the Idea Machines is an interesting blog post around this, and I can't remember the author's name, Nadia something. And it's really looking at these movements and looking at the pieces that are required in these movements, and that ability to fund initiatives to sort of continue to further the building of momentum in them, I think is essential.
Yeah, I love that. I would love to read that piece.
I'll send it your way.
Cool.
Okay. I'm using from now on, whenever we have a conversation for the rest of the season, I'm going to, at the beginning, identify the existence of Uno reverse cards and make sure that every guest knows that exists, because maybe I just love hearing myself talk, but I love this. Like,
it's amazing.
I like the idea of us sitting down at a dinner table and having a conversation that people want to eavesdrop in on. And it's the biggest privilege I have in my career, I think, is being able to sit down and sit and just like pull these threads, because I think C Club is like a sense-making network, and I think it's one sense-making network of a broader sense-making network that I participate in. And so much of the value in a fast-moving space like crypto comes from being able to like pull things together and maybe not see the future, but at least get a sense of where things are going before other people do. And these types of conversations are very clearly like that. And I feel very lucky to be able to talk with you about them. We're up on the hour here, and otherwise I just talk for forever.
Which is crazy.
I know, it's crazy. So we're going to try something new here that I have to open up my Discord here, because our media team has sent me a lightning round questions to ask you, which I think is fun. That could be kind of fun. So I'm going to hit you with a couple things, whatever comes to mind. Oh, these are actually pretty good. Okay. Book recommendations for builders. What are you reading?
Oh, shit. So I just
got this book.
I haven't read it yet. So please, I literally just came in the mail. It's called The Society of the Spectacle, which was a recommendation from Reggie James. And then I told my friend and also someone who works with us at TCG, Sophie, to read it as well. But I guess her Amazon Prime was faster than mine, and she told me that it's been amazing so far. So there's one. And then, my favorite book, but it really, I don't know if it counts for builders. I'm like looking at my bookshelf.
Do it. Let's hear it.
I'm really struggling because I feel like this is a really important
What was your favorite? Just say your favorite book. No.
My favorite book is Zen and the Art of Motorcycle Maintenance. And it's a piece
Classic.
of modern philosophy on like, what is the good life? And I feel like it makes me a better person every time I read it. And so maybe it'll make you a better builder.
Let's normalize personal development and self-actualization as a core, valuable place to invest one's time if you want to be a builder, especially in this space. I think knowing the challenges of running organizations that are scaling emotional intelligence and thoughtfulness and knowing oneself, I think, is a very worthwhile time to invest into. And I feel very lucky to have been able to do a bunch of that work. What do you think is the most overrated advice for builders?
I guess maybe like overrated. It's not even advice though. I don't want to say that it's overrated advice, but I think focusing on really core communities and like passionate audiences, at least if you're building for a consumer business, as opposed to optimizing for hockey stick growth in the early days, is really important. I think Farcaster is a really good example of this. Farcaster is growing by a fixed number of users every single week because there's this awareness that if everybody on the wait list or, like everybody on crypto Twitter joined Farcaster tomorrow, it would completely destroy the existing culture of the network, which is almost like what you saw with the Eternal September in 1993 when Usenet access was opened up to everybody online. And it absolutely destroyed all of the online forums that existed there and those kind of like digital gardens. And so I don't even want to say it's bad advice because I don't know if people give that advice to optimize for hockey stick growth, but I think like really leaning into passion is important and I think underrated.
Yeah, I don't know if it's advice. I think many people assume that that is the thing to follow. And I think you see that in many of the products that are being built, but can plus one for how forecaster is approaching it. And yeah, to me, that's intimacy, right? This feeling of like building for intimacy, building for passion rather than building for user growth. And if we apply that lens to community tokens, to DAOs, to NFT collections generally, that's probably a very helpful lens to sort of look at things that may have likely value in the future versus ones that are going to be or the fad versus the trend, I think is a good example here. All right. Who are your fave follows on Twitter these days?
Oh, okay. So I really like this Anon account, Knower of Markets. And he writes mostly about DeFi, but I just love his writing. So that's definitely one. 0xSMAC. He does this amazing weekly roundup of everything that he read, usually crypto, but also other stuff. And that is like the single biggest driver of the things that I read. And so he's another great one.
Yeah, I mean, absolute pleasure to hang out and speak with you today. We didn't even get into a whole bunch of the conversations I think would be just fascinating to have. There's sort of three pieces that I want to call out on your Mirror publication. Web3 and its mobile moment, I think is super valuable. Stop calling it a wallet. I think these are really useful explorations that get to some of the core questions that I think still exist in crypto and Web3. And I just really loved your piece on why is the internet so lonely? I think it actually has a lot of resonance for the conversation we had here today. So where can people find you on the internet or what should we shine some light on?
Thank you so much for having me. This was so much fun. I'm at Gaby_Goldberg on Twitter and I'm Gaby.mirror.xyz and hopefully we'll be writing a bunch more there soon.
Amazing. Thanks, Gaby.
Thanks so much.
Hello, friends. Steph here, Media Team Steward at C Club. If you like this episode, please subscribe, rate, and review Building at the Edges. This helps other Web3 builders discover these valuable insights. And tell us what you think on Twitter. Tag us at @CClubHQ. Thanks for listening. See you on the internet.